What does embedded finance look like from the other side of the Atlantic? Today I'm speaking with Jane Podbelskaya, founder of Charge Forward in Toronto. Jane advises software companies and investors in North America on embedded finance, which is, to put it simply, exactly what I do in Europe. When she reached out on LinkedIn, it immediately felt like comparing notes with a counterpart, rather than interviewing a guest. Jane's background is unusual though. She started as a software engineer, spent a decade in VC, watched Shopify turn payments into 75% of the revenue, and eventually decided the biggest gap wasn't on the capital side. It was on the education side. Software executives still don't understand embedded finance, and that's the problem she's built her whole business around. We talk about how investors are really thinking about embedded finance today, 6 years after Angela Strange said, every company will be a fintech company. We get into AI as a defensive moat, verticalization, the North America versus Europe divide, and the framework Jane uses when she sits down with a software CEO for the first time. My name is Lars Markl, and I'm the founder of Embedded Finance Review, a newsletter, podcast, and event series covering the European embedded finance ecosystem. If you are working on an embedded finance project and want a free intro call to get feedback and meet the right providers and partners, head to embeddedfinancereview.com. Before we start, a word from this episode's partner, HoPay. One thing Jane and I get into today is a data advantage that software platforms have when they launch financial products. A lot of that starts at onboarding. And onboarding is exactly where HoPay comes in, as the identity infrastructure layer connecting government identity systems worldwide so businesses can verify users across markets through one single API. Right now, most online identity verification still relies on document photos and facial biometrics, which were never really designed for the internet. HoPay replaces that with eID verification, which is more secure and increasingly required under regulation like eIDAS 2.0 in Europe. If you're building financial products and thinking about how you onboard users, you should check out HoPay. That's HOPAE.com, or check the link in the show notes. And now, let's dive in. Hi, Jane. Welcome to the podcast. How are you doing today, and in what part of the world are you located right now?
Hi, Lars. Great to see you. And thanks for inviting me to this podcast. I am in Toronto, and it's March, and it's very gloomy right now.
You did mention you still have some snow around us here in Berlin. Luckily, we have the spring arrived already, so it's
Canada for you, yes. Mm-hmm.
Hey, Jane, I'm really looking forward to this conversation. I did mention it in the introduction already. When you reached out to me on LinkedIn, it was an interesting point for me to look at your profile. You help companies with embedded finance in North America. You do have a newsletter focused on embedded finance in North America. Obviously, many listeners will know out there, this is definitely my profile as well. So I'm really, really glad you reached out. And we're having this chat because obviously we're doing quite a few things similar, but then in very, very different geographics. So happy, as they say in the industry, to compare notes and see what you are seeing and having an insightful conversation here. Before we dive into the meaty part, maybe you can give us a quick introduction about your profile. Going through your LinkedIn and seeing there's software development, there's VC, now working with companies with embedded finance. Obviously, I've done not the same journey, but ended in with a different background. Quite keen to hear, how did you end up in the world of embedded finance?
Yeah, happy to share the story. And indeed, there's not a lot of us, so it was really a great pleasure to find you and connect with you. So happy to exchange notes, indeed. So you're correct. My background, I started in software engineering, and the first decade of my career was all about building software. I was an engineer, I was solutions architect, focused on business process automation software. And after completing my MBA here at the University of Toronto, I did a couple of years as a management consultant with Bain & Company, but I missed technology too much, and I ended up joining a growth equity fund. And I spent the next decade of my career as a VC, as an investor. And the first 6 years, I was with a growth equity fund called Georgian, based here in Canada, investing across North America. And we were actually Series B investor in Shopify. And Shopify was actually like my first introduction into the idea of embedded finance. We were a pure SaaS investor, and we understood SaaS economics inside out. And Shopify was the company that decided to add payments to their product and to their revenue streams. And it was very, very confusing to us as investors. And then they've shown us that a company can generate 75% of their revenue from payments and other embedded finance products. So that was quite a fascinating journey to watch that unfolded over the number of years. But that's not yet how I jumped into embedded finance. I actually left Georgian and joined a Fintech fund, and I spent 4 years as a partner investing with Information Venture Partners, which is a fund investing in financial services technology. I invested in a payfac, and I was on the board of a company called Helsum for 3 years, and that's how I learned the economics of payments and payment facilitation and how it all works. I invested in insurtechs, in banking techs, and lending techs. And that's how I started to learn really about this new wave of embedded finance and how embedded finance vendors are now allowing software companies to offer financial services much easier than the journey that Shopify had to go through when they were embedding payments. And I just realized that the opportunity is really amazing and that financial services of the future will be delivered through software. And embedded finance vendors are enabling this trend. But software companies still don't understand it and they don't know how to do this. They know their particular vertical, particular industry that they service. They know software. That's already a lot to know. And then you add Fintech on top of that, and you get people totally confused. And that's how I decided to embark on my journey of launching my own companies, helping software executives and software companies to understand embedded finance and embed financial services, and ultimately make money out of it. So that's about me in a nutshell.
And I always remember back this quote, I think it was Steve Jobs who said, like, you can only connect the dots when you look back. And obviously, as mentioned, you did started in software development, and then you went into VC, and now you're helping companies. And after you had the VC experience, first the general tech and then the fintech one. So there are, of course, a lot of like points that kind of like add up to embedded finance. But maybe when you're now like doing the job you're doing, like how do you look back at the different stations in your career and how are they enabling you to help your clients eventually?
So I guess the key insight that I already mentioned to you is that software companies have this amazing opportunity to create very substantial new revenue streams. Shopify is one such example, but you can look at, as soon as you start looking, you'll see examples everywhere. Like Intuit is tax and accounting software that generates substantial part of the revenue from fintech and payments. GoDaddy is a domain registration service that is actually a fintech in disguise. Toast is a restaurant tech that is offering restaurants software to manage their operations, but 85% of their revenue is fintech. These examples are everywhere when you start looking. But as I said, the vast majority of software companies still really don't understand fintech. And after working in fintech investing and on the fintech side, I realized that, well, there's a good reason for that because fintech vendors, they understand fintech very deeply and they speak with a lot of jargon and they get so used to it that they forget that not the whole world speaks that language. For example, when an embedded payments company is talking about a software company that they're trying to work with, they call them ISV, independent service vendor. Software companies don't call themselves ISVs. When payments companies talking about buy rate and sell rate and attach rate and take rate, software executives' eyes glaze over. They understand SaaS metrics, they understand ARR, they understand retention. They don't understand these terms. When payments companies talk about clients of a software companies, they call them merchants. Software companies don't call their clients merchants. They call them either clients or customers or maybe logos, but not merchants. So that whole disconnect is just the surface level misunderstanding. And then, of course, when you go into the nitty-gritties of like how you make money of payments, again, the gap in knowledge is still really big. So this is why I decided to launch Charge Forward. So Charge Forward is my platform that I run, and it's both advisory and a media platform. And again, my core mission is to really demystify, decipher, and translate the world of embedded finance for software executives to use, and again, to generate these amazing new revenue streams from embedded finance.
And yeah, as you said, there's definitely maybe more of us required to do that because it's a major challenge. Like, but for me, from my perspective, I'm of course based here in Berlin and looking a lot at the European market. Whenever I look personally at the US market, I always feel like, okay, the challenges that you described right now, I always felt like, okay, there are purely or mostly also in Europe, not so much in the US, because again, when we in Europe talk about embedded finance success stories, very often, of course, we also have our local success stories, but nevertheless, Shopify, Toast are definitely the names that very often get dropped as well, right? So it's a little bit my assumption or maybe the hope or the understanding that's like, okay, it's going to be like much easier in the US because you have so much more of these companies who are doing it, maybe a little bit ahead of the curve that what's happening in Europe. So the problems you're describing right now to me, I thought like, oh, this shouldn't be such of a big of a problem in the US because it's a little bit more progressed and a little bit more adopted, but it doesn't sound like it the way you're describing it.
Not really. And again, embedded finance is not just payments, right? Payments is just the first most commonly embedded products, but there is also embedded lending, embedded insurance, embedded payroll, embedded early wage access. There's lots of other products. And I would say people are starting to understand payments, although again, the gap in understanding is still pretty deep. I am running endless sessions, education, training, explainer sessions. I'm publishing a lot of one-on-one content, just explaining what is a payfac, what is a payfac as a service model, what products Stripe actually has, and how do you actually make money from payments, and how to think about it at the different levels of GMV or the payments volume. Still, there's a lot of education needed. But when it comes to other products like lending, banking, insurance, the gap is even deeper. So that those are really poorly understood products that are yet to become mainstream. So there is a long journey ahead of educating and handholding. Yep.
Good to know. Good to know. And Jane, we obviously spoke about your background, and before doing what you're doing today, you were in VC. I'm quite keen to hear, like, obviously we, in our embedded finance industry, we very often have this quote from Angela Strange, every company will be a fintech company. I think it was like January 2020, so it's now over 6 years ago since this phrase was coined. Obviously, a lot of discussion about if people agree with that statement, yes or no, but let's not go too much into that kind of like unnecessary details. But what is the US VC perspective on embedded finance? I mean, here in Europe, we have, I guess this is everywhere as well, is going a little bit through this hype cycle. I think especially the COVID years were pretty heavy on embedded finance, and we also had some challenges after that. What's your personal view on especially the VC or the investor look at embedded finance?
It's a great question. And in terms of the cycle and whether it played out, it absolutely has played out. And we are in now what people call a pragmatic part of the cycle. Software companies are actively embedding financial services. But it's quite unevenly distributed, both amongst companies and amongst investors. I do a lot of portfolio assessments for funds to help them identify embedded finance opportunities in their portfolio companies. And again, there is a huge difference between different VCs. Some VCs, they understand it. And I have to, again, do a lot of very, very basic education. But there are some VCs, so I'll give you an example. I have a close partnership with a fund called Mamba Growth Equity. It's a New York-based fund that specifically has a thesis of investing in vertical SaaS companies that have an opportunity to embed and monetize financial services. So they speak exact same language as I do, and we go after effectively the same types of companies and the same types of founders. And we help those founders understand the embedded finance opportunities that they have, and then make it happen post-investment. So yeah, there's a new cohort of VCs that have that as an investment thesis. And I'd like to think that it's growing, but it's still, again, the catch-up is real both amongst software companies and funds.
Of course. And do you think then the embedded finance piece in software companies is playing a major role for a lot of VCs to make a decision to invest into a certain startup or to pass? I mean, I'm specifically thinking about, we all know the numbers, and you did mention some of them for Shopify or Toast or other companies, how much revenue they make already with financial services. Obviously, that's not the starting point. Very often it starts very, very low. But what does the embedded finance play for those VCs who get embedded finance for making an investment, yes or no?
So absolutely, as I said, it's not even. And some companies, some funds have that as the core thesis, and some funds may have one opportunity that they look at. In terms of the results, so yeah, we talked about the 75% revenue stream from payments, but in general, so there's now well-proven stats that have been published by multiple different organizations. So Bain and BCG and ADN and William Blair have all published statistics about embedded finance. And they all agree, the consensus is that embedded finance can increase revenue by 2 to 5x on a customer basis without adding a single new customer. So that's the immediate beauty. The second is embedded finance actually improves retention by up to 60%, because if your customers are using your software to process payments or obtain their loan, they're way less likely to churn away from you because you truly become operationally entrenched into their business. The valuation multiples are also notably higher for companies with embedded finance. They're 20 to 25% higher than pure play software companies. And it's only becoming exaggerated now in this AI hype cycle when pure SaaS companies valuations are coming down. The companies with embedded finance, they're still holding up quite nicely. So yeah, the investors that know these numbers use that as their thesis and underwriting. And I work with different funds. So for example, I work with search funds that may be looking to acquire a target, and I help them do diligence on a target for acquisition. And I specifically diligence the embedded finance piece because that piece for a company that is maybe only 3 million in revenue and profitable can double the company's revenue over the course of the next couple of years. So it's very, very meaningful for them. For funds like Mamba, as I said, they invest in companies that are already on a high growth trajectory. Embedded finance becomes additive, but it's still a very, very powerful lever to increase the value of those companies and grow them further. So absolutely, yes.
And from looking at the companies who are building embedded finance, I mean, you mentioned yourself as well, embedded payments is the standard and very often the first starting point, and then potentially also other embedded financial products follow after that. Do you see a specific, let's say, playbook, or is there kind of some role models in terms of what products to build in what sequence that companies follow, or what's your view on that?
That's another great question, because quite often the work I do with companies, say post-investment or in portfolios of funds, is to figure out their embedded finance roadmap and to map different embedded finance opportunities on the efforts to implement versus expected revenue upside. So I basically help them plot different opportunities. It typically starts with payments, just analyzing do they have payments? If they do, is there a way to optimize it? Is there a way to move to a different model? So maybe they are on Stripe Connect. Now it's time to move to payfac as a service, or maybe we can optimize the payment economics to maybe adjust payment pricing to extract highest margin. And then we start looking at other products. So give an example. So let's say events management company that is selling events tickets. We would look at opportunities on the B2C side. So for people who are buying tickets, maybe they want to buy a ticket cancellation insurance, or maybe they're buying a seasonal pass and they want an option to buy now, pay later, pay in installments for that ticket. So that is a form of a embedded lending product, right? And then we look at the B2B side, where we look at offers for the actual performing arts organizations, because in performing arts, if there is a concert coming up, all the costs are very heavily weighted up front, but you get the ticket sales revenue later. So there's always this cash gap. So offering an embedded loan may make a perfect sense for this kind of organization. And again, there's insurance against what if a main character, main actor is sick before the show? So what is the insurance for that? So you can figure out which products make sense given the workflow, given the industry. And again, you look at the buy versus build decision. I look at different vendors that they could partner with and how long it takes to implement each product and what expected, excuse the terms, attach rate. Attach rate is a percentage of customers that will actually use this embedded product is expected to be, and we build a roadmap. So yeah, that's how I go about choosing which products and which sequence to go after.
Makes sense. And again, like with your background as a VC, you have followed the embedded finance wave already, and now obviously you're even more into that. What's your prediction over the next 5 to 10 years? Do you think at one point the market knows embedded finance and our work is done in a way, or what's your take on how the industry is going to look like in that time frame?
Well, in the last 5 years, all I've been seeing is that there is just more and more embedded finance vendors out there. So the market is becoming very, very fragmented. So there is the big behemoths like Stripe and Adyen that have a full suite of solutions, but there is a reason that a lot of smaller vendors are coming up everywhere in payments and lending and insurance. One reason is that people are innovating on the models, right? So like the payfac as a service is a quite innovative model that is, again, very popular in the United States. And that model was pioneered and picked up by a number of vendors. Another trend that I'm seeing is verticalization. So I see more embedded finance players that target specific industries. So for example, I'm working right now with embedded insurance company, vertical insurer, and they have specific verticals that they go after offering products. So insurance, I mentioned event management is one such vertical, but then another is for educational sector because people are paying tuition, they want to insure it and protect it, or people want to insure their pet, and that's healthcare sector, right? So I see a lot of players starting to choose their preferred lanes and preferred verticals.
Interesting. I mean, I'm just trying to compare it. I mean, it's like my European view. When I started my Fintech career, it was in open banking. And I remember with our open banking provider that we built here in Germany, we did all the different use cases and didn't really exclude anything. It was data readout for different use cases, payment initiation for different use cases. It was a whole lot of complexity. And then obviously those players who succeeded were really, really good at the use cases that really mattered for the clients, right? So I think with our company, very often we focused on use cases that were not so easy to build a financial business case around it, neither for us nor for our customers, but really focusing on the ones in the open banking use case segment. It would be underwriting for loans, a really interesting one, or maybe payment initiations, a really interesting one. So what you said as well right now, I mean, I'm also I think we see it in parts as well in Europe, but this whole okay, embedded finance itself is obviously a very, very broad and very massive term, but even embedded payments, embedded banking, embedded lending can be really, really broad. The question is really for example, taking embedded lending as an example, what kind of industries you want to focus on and what kind of companies or consumers, obviously, but let's say in the business of B2B lending, what kind of companies do you want to focus on? Are there those who struggle with get financing, or those who have a lot of options, but you want to provide them a cheaper option? There's so much breadth to it, right? And it really depends on where the strong uptake is happening and where companies can grow eventually.
The reason verticalization is also very powerful is, again, if we pick up the topic of AI, right? So AI is only as good as the data you feed it and train it with. Well, if you are a software company servicing, I don't know, let's say Toast, take the restaurants case, right? You are processing their payments. You actually aggregate a lot of very unique data about every restaurant that you have on your platform. And you know how many customers they have, how much money they make per night, what's their relationship with their suppliers. You have a very, very intimate view into the operations of individual restaurants, better than any bank ever would have. And you can use that data to offer financial products. So say if there is a cash gap on Tuesday, but the restaurant always has a big night on Friday and Saturday. So you can offer that micro loan that a bank can never afford to do because they never have that nuanced data. So the idea that embedded finance allows companies to aggregate that data and create and offer verticalized financial products to customers and companies in that vertical is also something that people, I think, still underestimate. And this is, again, like another interesting connection with embedded finance and AI.
And yeah, you did mention AI earlier as well. And that reminds me of what you said earlier. I'm quite keen to also go into that rabbit hole, so to say. Obviously, you work with companies really focused on embedded finance and helping them to understand embedded finance. But as we all know, AI is revolutionizing quite a few of the industries and having quite a big impact. The companies that you are actively working with, and those were building embedded finance product, how do you see, I think you said something earlier, correct me if I'm wrong, where embedded finance can be part of defending yourself against the impact of AI, potentially disrupting your business. You want to maybe explain that a little bit more detail with what you're seeing there?
Yeah, I'm actually quite excited with this thesis because everybody can see that AI is disrupting software. It's making software easier to write. And also AI is now replacing functions. And the idea of paying per seat makes no sense when AI can now replace your whole customer support department with just one software, right? So how do you charge per seat in this kind of environment? So the reason embedded finance is actually an antidote is because, well, first of all, you can't really vibe code payments or lending or insurance. These are complex products. There's regulatory frameworks around each. There is compliance frameworks. So these are sophisticated products. And companies that use software with embedded finance capabilities, again, they have to get their payments somewhere. They have to get their loans somewhere. They have to get insurance somewhere. And if they get it through software, they actually allow that software to grow and make money from transactions, payments transactions from loans, etc., as opposed to from seats. So you're, first of all, as a software with embedded finance capabilities, you're tapping into the operating budgets of the companies, not into their SaaS budgets, because you need to run your payments, etc. It's part of your operating budgets. And you're also growing when your customers are growing. If your customers are successful and their business is expanding, they're processing more payments and you're growing with them and everybody wins. Every partner in this ecosystem wins. So it is an antidote for AI disruption, if you will.
Do you see already companies picking up on that thesis in the way, or on the antidote as you described it, were companies reaching out to you, or maybe just generally in the market say hey, maybe we should build embedded finance product. It's maybe not the perfect antidote to prevent everything that's happening with AI to the business, but in a way of one way of defense, basically, of disrupting their market position.
Absolutely. Because again, the idea that you can vibe code a vertical SaaS is a little overblown, because if you are, let's say, a software for couriers, right? So last mile logistics couriers, and you've been around for a decade. So you've built very, very sophisticated and nuanced workflow solution that deeply understands the needs of these couriers and their clients. And this is not something that you can vibe code overnight. It's not about the speed of development. It's all the knowledge of all the nuances of the workflow of that particular industry. That is what's defensible. What is harder to defend is, again, per seat licensing. But if you add, again, payments, lending, insurance to this software, and your courier starts to book their trips, so their customers book their trip and pay for these deliveries through your software, then if your courier is growing, your software is growing with them. And you can even give away software for free, even if you're making money on the transaction. So that verticalization of software plus embedded finance is a very strong moat against AI disruption, if you will. And yes, I absolutely see this, that companies and funds are starting to recognize that.
Interesting. As you mentioned, obviously you focus with your work on the content, everything you're doing on North America. Obviously, we're doing something similar here in Europe. Before we started the recording as well, we spoke a little bit about the difference in the market, and as you also pointed out that you're not so familiar with what's happening in Europe, but quite keen to hear, is there right now something within the embedded finance ecosystem, let's say a trend or something where you say this has been getting more in the focus of the embedded finance people than maybe 2-3 years ago?
From what I understand, the difference between North American and European market, European market is, I don't want to say like a little behind, that sounds negative, right? But the regulations are quite different and the markets are a bit more fragmented because of so many countries participating. And for example, from what I understand, the concept of payfac as a service is much more mature and developed. And frankly, like there's a lot of payfac as a service providers and in North America. And as I said, some of them have like specializations in specific industries, while in Europe, this idea of payfac as a service is much more nascent, and the regulations, it's actually not apples to apples. Like that whole payfac light basically is the way things have evolved. But on the other hand, from what I understand, Europe is ahead when it comes to open banking because of the, again, regulatory background. We in North America don't have such an advanced open banking ecosystem. So that's where we are still kind of playing our catch up. So yeah, the markets are a bit different. There's parallels and things to be learned, but they're evolving at different pace in different areas, if you will.
Makes sense. And then maybe coming slightly to the end, like the companies you're working with, obviously you're dealing with companies on the different, I mean, now I always tend to say like it's a journey with embedded finance, right? Like the companies who have not heard about it, then companies who have heard about it, considering it, planning it, building it, growing it, and then maybe at the end of it, like mastering it, right? Is there kind of like, let's say, especially like more, again, looking more at the US, some kind of like common advice you are giving to people you feel like, I mean, you did mention already in some of your explanatory content that it's the same thing over again to share with the people out there, but is there a kind of like, let's say, like some advice you're handing out quite often where you feel like, oh, this is something I should mention here on the podcast, so maybe not just in the US, but also people around the globe fully get?
Yeah, maybe I'll try to give a framework of sorts that I use both with companies and with funds when I assess their portfolios. Not every company should embed financial services, first and foremost, right? There's companies who are not automating a workflow that is touching money. Like if you're a cybersecurity company or if you're a drug development AI company, like there may not be a natural point to inject financial services to begin with. Next thing is you need to know how central that financial point or money flow is to your workflow. Because if you're, let's say, a travel company that sells travel tickets, it's very central. Every transaction that happens on your platform involves a ticket purchase. But if you are a procurement solution that has payments attached to it as like a last step of procurement, well, the thing is that many companies may be using their bigger ERP systems still to actually perform the purchase. So you need to see like how likely your customers will actually to adopt. And is there a pain point? That's another thing that I encourage people to look at. Don't start with the product, start with a pain point. Do your customers let's say if you're software for a dental office and you regularly need to chase your customers to pay that remaining piece after the insurance covered the bulk of the procedure, and you don't have a good way to collect that payment, well, maybe embedded payments sent as an email or a text makes total sense for the software and for your clients, right? So like, look, what is that pain point that you're trying to solve? And then another thing, of course, to look at the volume. Like, do you have the right enough volume to justify embedded finance product? And what model and what vendor you're going to partner with? So that's another thing that, fortunately, maybe for me, because that's why I have my business, but people still need a lot of help with, is figuring out what specific embedded finance, buy versus build, embed, take on the more risk, less risk, payback as a service, or referral payments. Like that decision is still confusing to people, and choosing the right partner is super, super important. This is why I'm happy to help people that are making that decision. And I'm purely vendor agnostic. I don't take any commission from vendors. So I am always on the side of the software companies. But regardless if you work with me or not, the advice is just like, be thoughtful about the way you choose your model. And finally is like we talked before, don't think about one specific product. Don't think about payments. Think about the portfolio of products, because your payments inform your lending product, and more loans are being taken, the more payment volume you generate. So all your embedded finance products are quite synergistic with each other. So just think about them as a portfolio. Yeah, that's as short as I can get it.
No, it's funny, like how we spoke about the differences between Europe and the US, but then this advice you shared resonated a lot with me. Specifically, this first point you made. I think in one of our like virtual events, another podcast episode, we also had this phrase of like, just because you can embed it doesn't mean you should. Like basically, just because there are providers now out there who allow you to do embedded payments, embedded banking, and so on, just doesn't mean you should. It's not so much about the product; it's a lot more about the customer pain points and what you're trying to solve and the jobs to be done that your customers try to achieve with you, and this is a lot more relevant. Thank you, Jane. Was really interesting. Again, like very, very glad that you reached out to me. We did mention you have a newsletter. Maybe let's also share with our audience. I'll put it in the show notes, but you can also share maybe with the audience where they can find that newsletter.
Yeah, I run it on LinkedIn. I also have a portal, chargeforward.io, where you can subscribe to my newsletter and also dig through a ton of content that I publish there. It's all free, ungated. Just eat and assume as much as you want and consume and read and learn. That's my spirit.
Perfect. And otherwise, find Jane on LinkedIn as well, not just a newsletter, and reach out to her if you're in the US or think there's something she said where you want to pick up your brain, I guess.
Yes, and if I don't know the answer or if the question is European, I will just ask Lars. So I'm excited to collaborate. So thanks so much for this conversation. This was great.
Thank you, Jane. Until next time.
Thank you for listening. If you like this episode, make sure to follow the podcast in your favorite podcasting app so you don't miss any future episodes. And if you know somebody with an interesting embedded finance story to tell, please make sure to tell me about them. Until next time.